Hey everybody, Nathan here, and I wanted to do a short video on what is a good credit score. And I've been in the mortgage business for over 20 years. We've helped over close to 2,500 people over that time to be able to actually buy a home or refinance a home or get a home equity line of credit and that type thing. And over that time, I've been asked many times, basically by almost probably half of the people that we've helped. And that is, what is a good credit score? What kind of credit score do I need to buy a home? And so I wanted to kind of cover that in the video today and just kind of give some really simple basics of a good credit score. So, um, I've pulled up, as you can see on the screen in front of me, kind of a neat little tool here that shows, what a good credit score can do for you when you're buying a house. So this shows just a little example of a $200,000 home. If somebody has a 630 credit score, this is just showing a ballpark example, just so you can kind of see the differences. But for example, a 630 credit score would be around $989 a month, over 30 years. And total interest paid of around $156,000. But if your credit score was a good credit score in the 760 range, you can see the difference here between the 156,000 in extra interest, down to the $92,000 in interest that someone would pay, with a better interest rate and better APR and that type thing. And even the monthly payment in this example shows about $170 less. Now, this is not exact. It's really just to give you an idea of the difference of what a good credit score can do for you compared to one that's in the fair or below average range. So, a 630 credit score, you could still possibly buy a home depending on what program and what area that you're in, but obviously you're going to pay more money for that. With the 760, you're going to have the better programs and qualify for the higher tier programs that are out there. So just kind of wanted to show you that. So if your credit score is, in this 630 range or even in the 500 range, there is hope for you. That can be corrected. And so I want to talk about that just a little bit. So I'm going to pull up another picture here. And this is actually from pennyhoarder.com, which is a really neat website that has a lot of good information on it. And it's got two different graphics here that I want to show you. The first one is a credit score range. So this one is a pretty common graphic that you can find online anywhere, but it kind of shows the differences of scores. So below a 600 credit score is basically considered a bad credit, not really eligible for a loan or a credit card or anything like that. 600 to 649 it's a poor credit, and it says unlikely to get loans with good terms or rates. It is possible to get some decent terms on some government loans when you're thinking about a house payment or buying a home, but it's still not going to be the absolute best, if you know what I mean. 650 to 699 in their eyes is considered a fair credit score. You could get average interest rates on loans and that type thing. 700 to 749 is good. So when we talk about a good credit score, in my mind, I kind of think of a 680 to 749, but anywhere in that range is still considered good. You can see it could be offered better than average interest rates and that type thing. And then excellent would basically be anything over a 750. So it basically says take your pick of favorable loans, credit cards, etc. But not everybody has, that benefit of the 700 to, 750 credit scores. Everyone's situation is different. It doesn't mean that, that you can't get in that higher tier. It just can take some work to do that. And so when you think about, doing some work to raise your credit, you can definitely hire a, credit repair company and things like that. But if your credit scores are low, but you don't have a lot of major issues on there, maybe a few factors to kind of draw it down, you may be able to fix your credit yourself. So this one, again, on pennyhoarder.com, it shows another little graph here that basically says what your credit score is made of. And when you think about the full credit score that you have, you can see the different things here. So credit utilization of 30%. So that means, let's say I'm just going to use this as an example. Let's say you have a couple credit cards with a credit limit of $1,000. If you've got credit, your credit totals on those of like $900 if you owe that much on cards that have a limit of 1,000. That's going to pull your credit score down, and that's going to basically be 30% of your overall credit score. So if your credit cards are maxed out, personal loans are maxed out, then that's going to hurt your credit, your overall credit score there. So you want to make sure you keep your balances low. Your credit history is 15% of your overall, FICO score or credit score there. So depending on, how you've paid your bills over the past several years, if you have any collections, even different types of collections can play into that. So that's about 15% of your score when you're thinking about, your trying to get a good credit score. Credit mix, 10%, new credit, 10%. So, so that plays a factor, but the biggest factor of all here is your payment history. And so whenever we're advising clients, whenever they're looking to buy a house and maybe they don't qualify right at the, this time, we always recommend that they try to get some good pay histories going before anything else. Because it is a big part of what your credit score is going to be. So with a 35% factor on your credit score, that tells you that, hey, if you don't have any, accounts that you're paying on, and you're basically in your credit is maybe just a couple collections and things like that, then you're going to have a lower score. But if you can try to get a little payment history established, that can go a long way in getting your credit scores up into that good range, and that type thing. So I want to go back over here to the part that we started with on the 30-year fixed house loan. If you can get basically a couple of new accounts established and start paying on those, that can go a long way in getting your credit scores up pretty quickly. So even if you're in that low 500 range, 550 range, and you're trying to get those up, you may not have to hire a credit repair company. You may just need to get a couple of new accounts established. And so you may be thinking, okay, my credit's not good. How am I going to get a new account established? Well, that's kind of where a program that we offer comes in, and it's a really, really neat program. And it's basically a credit builder secured debit card. And I wanted to show you that. So you may have heard of a secured debit card before, and the way a secured card works is most of the time people will go to their local bank and they'll say, hey, I want to get a secured card, and they'll say, okay, well you can deposit $300 or $500 onto this card, and then basically you can use the card each month, and you're using the money that you've deposited, but it gets reported to the credit bureaus. Now, sometimes it's hard to come up with $300 or $500, for a card like that. So, so this is one that we recommend to a lot of our clients, and it's the Credit Builder card. And we do it with Success Credit Builders, and it basically kind of walks you through, how this card works. And the way they do it is it's basically a $200 deposit, as you can see here, and you can open a secured credit card. You don't have to go through any kind of, major application process. You do have to obviously put your information in, but if you're going to put your $200, $200 of your own money on the card, then it'll most likely be approved. It doesn't really look at credit or anything like that when it's doing it. So, the neat thing about this is you basically deposit $200 on the card, and then you want to use the card every month. So, you can do that, using gas, you can pay for your gas with it, some kind of small purchase. But if you remember from one of the pictures we looked at earlier, you want to keep that credit utilization percentage down. So if you want to keep it, keep it to where it's going to help your credit the most, you really want to keep your balance at 10% or less at all times, and then pay that off every month. So if your secured debit card has a $200 limit, then you really only want to charge about $10 to $20 a month on the card, and then pay that off at the end of the month. So one thing that's kind of recommended on that, just to kind of streamline the process for you so you don't have to think about it all the time, is maybe use your Credit Builder card to set up your Netflix account, to where it pays, automatically, every month. And then you just pay that, pay the Credit Builder card off every month for your Netflix. So you can do that with Hulu or any kind of recurring, payment like that. It's going to come out every month. That's, $10, $15, whatever it may be. And then that will continue to build your credit. in a good way. So typically what we recommend is doing two cards like this. So if you can do, if you can do $400, so two $200 deposits, that's going to actually speed up, the time frame on when you can actually increase your credit scores in that way. So again, we recommend this card if you don't have really any other accounts right now, or if you maybe have one or two, but you want to increase those scores a little more quickly. It's a great option for that. Now, one thing that's nice about the Credit Builder card is they actually report to the credit bureaus a little more often than a regular card. So that way you can actually get the benefit of the of using the card, a little quicker there. So you can kind of see the difference between just a regular credit card or the Credit Builder card. If your scores are lower, you're probably not going to qualify for a credit card anyway. But if you do, then the interest rates are going to be pretty high. You're going to have higher interest payments. You got a higher credit card maximum. It reports 30 days. The way the Credit Builder card works is that the interest rates are low, but you're still, basically paying on the money that you've borrowed. And then also you got the $200 limit, so it's easy to manage in that way. It's designed to help you build your credit, and it reports within a week of approval. So once your card is approved and they're sending that card to you, it starts to hit your credit report as far as having a new account pretty quickly. Now the nice thing too is once you don't have to keep the Credit Builder card open forever, but once you close it out, you'll get your $200 deposit back, assuming that you've got your balance paid down to zero, and that type thing. So anyway, if you want to kind of check that out, you can look at the link below this page. It's an affiliate link for us, so we do get a little bit of benefit from them if you do sign up for the card. But you can click on the link and it'll take you to the page, and it'll walk you through the application process, which is really easy. You just click on the Build Your Credit here, do the 2-minute sign up. It'll take you through that, and then you'll find out pretty quickly if you're approved, and then when your card will be coming in. So again, thanks for watching the video. Like I said, click on the link below this, and then if you have any questions, feel free to send me a message. I'll have my email address below the video as well, and wish you the best. Thank you.